Hi everyone, we've got Matthew here, who's a private wealth strategist helping high net worth clients who have an average of 5 million of investment funds. And it's important that everyone thinks about not only growing the money, but things like due diligence when you're looking at investment opportunities, asset protection, liquidity, and various other things. So we thought I'd bring Matthew on here for those people that are growing their wealth and also those people that have got really successful portfolios or sold the business or whatever they might be doing, that they've got substantial amounts of money. How do they protect themselves in future? Matthew, thanks for coming on.
Yeah, great to be here, Luke. Thanks for having us.
First question I want to really explore is, how do most high net worth investors think diversification means shares and property, your basic everyday, what we think about in terms of investments. But what is one investment opportunity that you see sophisticated investors using that the average wealthy investor still misses out, and why?
Yeah, it's a good question. Look, diversification is really critical because everyone's goals are different in terms of how you structure and where you want to invest people's money. But, traditionally, people look at shares and bonds. And property is the only types of things to invest in. There are different opportunities out there for people, such as sort of like a private lending equity point of view, where you have the opportunity to almost be like the bank and lend money to different projects that are available that can generate you a decent return on your money. You still obviously have contracts and so forth in place to protect you from that point of view. So that's a little bit more low risk, but still gives a good income dividend monthly.
What kind of numbers are we looking at in terms of your average return?
Yeah, so some of those projects have been averaging around a 10% return per annum with a monthly income distribution. So at least you're still getting some monthly income.
So 10% plus. So you're getting more like what, 12 to 15?
Some of them are, or it's 10% per annum, but it's just basically paid out on a monthly basis. So it just depends on the project and what they're willing to offer from that point of view. But it's a really decent return for a low risk investment. Other opportunities that we have as well, where people have the opportunity to invest in certain funds, which is more for your sophisticated investor. These businesses basically go around and they buy businesses, do them up, and then look to on-sell them within a 3 to 5 year period.
Okay.
And they make some substantially really good returns.
So even higher than the first option?
Yeah, so them have been averaging probably around 15% return, sometimes up to 18%. Just depends on the business. But they've, been doing it for 20 years. Obviously, you still got to diversify, but it gives the opportunity for people to actually invest in other assets that they weren't aware of. And definitely try and achieve a return that's potentially going to give them a lot more what the average of the share market's done.
And then what are other investments that, people kind of don't think about traditionally in terms of, when they are creating wealth?
That's, it's interesting, that one. I guess most people we sort of look at it in terms of like, well, what's the experience? It's all well and good for someone to come and say to you, going, we're property developers, or, we do this in crypto, we do this in shares, we're achieving this. And it's like, well, that's all well and good. But I guess from our point of view, we've got to see the walk from the walk. We still got an approved product list to adhere to, so we've got to do due diligence from that point of view, make sure our licensee is comfortable. So that way, we're making sure we're putting investors in areas that is going to be comfortable for them. So one, it's got to be experience. You want to see proof in existing projects as well.
Okay.
What's actually being done in those projects, what's the returns been, and so forth. So I want to see figures in black and white to make sure that actually stacks up and it's worthwhile to investigate further. Another thing too, though, is obviously the asset protection of people going into whatever these investments might be.
Yeah.
You want to make sure that you can minimise the downside risk as much as possible. When you're investing, millions of dollars in certain projects and so forth, you want to make sure that you've got that asset protection and you're mitigating as much risk as possible. So that way, it gives people peace of mind that what they're actually investing in is giving them that downside protection.
Yeah, the due diligence is paramount in terms of looking at the investment strategies, and especially for high net worth individuals who have gone and made a lot of money, and then to see it all go down. We see these investment strategies often in this situation where they've made a lot of money and they've lost it all afterwards. I think the next one I really want to talk about is around asset protection. So from an asset protection perspective, What are the most common structural mistakes that you see successful people make when they start investing outside the traditional assets? What are they making?
Yeah, so even going back to what you just said prior to that though is, they've made a lot of money and then they go to invest and then they lose a lot of it. And it's like, they're almost just chasing the next best thing from a risk point of view.
Yeah.
And it's like, if you've actually built that wealth up, the next step is to go, all right, what does it actually need? Is it growth? Is it cash flow? And then how do you put those layers of asset protection in place to do that? Because you've worked hard to get there. You don't want to unpin it all, right? Because that's potentially taking away your freedom from an income point of view, and also what you want to do from a legacy aspect. So I find that the asset protection is actually the biggest key to everything in terms of once you've gone down that path. So,
and is there anyone that you have in terms of clients that have had a look at, due diligence, asset protection, high net worth, that you can really share an idea about what their journey's been, so people can really understand what they are in for when they've made money or they're on the path to making money?
Yeah, no, that's fine. Actually, we're dealing with one at the moment where there's been certain assets that were bundled up in certain entities together, and it was actually purely done just to save $2,500 to set up a new entity. I know you shouldn't laugh, but these things do happen sometimes. And I'm like, I think what happens is accountants look at it like, we're just going to set this up and then put a few more assets in there. And not every accountant's under that banner either by any means, but just to save an extra $2,500, but not understanding what's the end goal when there's potentially, substantial amount of money, potentially in the millions, that's going to be there at the end of it. Why would you want to link other assets within that, which could potentially be jeopardized because another asset is conjoined with another asset that's in that entity? So sometimes seeing that, sometimes it's warranted, but other times it's like, why would you not just spend that extra money and set up another entity to hold that asset on its own?
Okay, so these people took your advice, set up a new entity. Is that
well? They obviously wanted to get a new accountant. Well, what they wanted was a second opinion. So we went to another accountant to give them a second opinion, because at the end of the day, they're the expert in that area. We have a good general understanding and knowledge to then say, hey, this should probably be reviewed further. So they went and got a second opinion. Look, underpinning some of those investments was really not really going to be worth their while, because they're going to pay a lot of stamp duty and capital gains tax. So some of them had to sort of just sit and be done with it, and just try and take that risk. But obviously moving forward, doing other investments, then decided to change and actually look at, all right, each new asset that they go to do, what's the best structure in terms of how and where should we be putting this, which is always to go back to the accountant. I understand a lot of it, obviously. I still go back to my accountant in terms of, hey, we want to do this is the end goal we're trying to achieve, what's the best asset structure around it.
So I guess you see these things every day, right? And you're dealing with clients every day that have these structures in place. So I imagine that you're in a position to ask them or share questions with them that they can take back to the accountant. So this is where the whole team, I feel, and I've worked with in the past with investment strategies, the whole team works together. So my mortgage broker is giving me advice, or giving me questions, I should say, to say, okay, take that to your accountant and discuss that idea with the accountant, or taking it to a financial advisor or wealth strategist to actually get to that point where you're thinking about what the next steps are and what to ask. Is that where you're coming from in terms of where you see the benefit of having that team in place, where you can actually say, hey, have you thought about this? Go back to your accountant.
Yeah. It's really critical that you've got the right professionals in all those different areas, from an accountant, mortgage broker, solicitor. So we'll even collaborate with those professionals, because at the end of the day, we're like, hey, we want to work towards doing this strategy. We'll then liaise with their accountants to terms, well, what's the best way to go about this? Are we going to do anything that might jeopardise tax deductions and so forth? So really, once you've got, I guess, your A team with you, it's a matter of all liaising with everyone to how do you get to the best outcome for the client.
So what's been the with your client that went through that change in structures and things like that, what's been the outcome from them as a result of working with you?
Yeah, look, there's been additional layers of asset protection. Obviously, being self-employed, entrepreneurial, they've got their pies in a few different things, so they need to make sure that they're protecting everything that they're doing moving forward. There's just some things that just obviously were tied in a bit together, which the accountants being able to work through and fix that. So that's really important. And then obviously moving forward as we do additional investments.
So how does that, like, for people just like looking to grow their wealth and don't understand too much about structures, how does that then protect them? Like, something happens in their business, what happens to their assets across various structures?
Yeah, so it's a really good point, because really at the end of the day, you know, from a business owner's point of view, you really shouldn't own any personal assets. And I guess the majority of people that are in that space in high net worth understand that you shouldn't be owning assets from that point of view. So you want to make sure that it's structured in a way that, I guess, everything continues as is. If something did unfortunately happen to you and you're no longer here, but also giving that layer of protection to your family. Look, estate planning is always a bit of a, I won't say it's a taboo conversation, but everyone...
It's a tough one.
Generally, we'll have high net worth clients will have wills in place.
Yeah.
But when you're actually getting to that next layer of, like, have you thought about a testamentary trust? What does it actually do for you? Like this client we're just speaking with now, you know, just sold a property for a bit over $6-7 million. Yes, I want to help out their kids, and their kids are all older and married. But I said to him, well, what actually asset protection have you got in place if you and your wife were to pass away, or if you were to pass away, to then protect your wife and those assets? So, you know, having that conversation around that testamentary trust, he wasn't aware of it, and so he's gone back straight to his solicitor and started that process already, because there's a lot of wealth sitting there. And like he said, he only knows what he knows. He wasn't made aware of it. And that just guarantees the legacy stays with his family, because if his children ended up inheriting it and unfortunately their marriage doesn't work out, well, they don't lose 50% of the inheritance that they've received. So it's pretty powerful, right?
Yeah, or other people challenge the will and things like that happen. So there's, I guess, a number of different aspects. And I think this is where it goes back to what we said earlier about that A team, to really start asking questions about various areas. And because you deal with so many different clients and they're all often got, you know, similar issues that they need, get their structure, get their wills, get the testamentary trust in place, all those other aspects that you're dealing with, you know, maybe other 18 players, you know, you're dealing with other clients. So this is important to have those people, you know, on your side to start asking questions of your other professionals as well. So if you're not asking those questions and they don't have that, you know, that A team or individual A team players don't have that experience, you're not going to get those great answers. Matthew, I want to know about liquidity. I think this is a big one in terms of, you know, people that I talk to around investments. When am I going to get my money back? What's going to happen? How long is it going to take? I see so much of this, you know, as being a buyer's agent previously, and people thinking about, oh, am I going to get growth in 6 months or 12 months? I was like, you know, obviously with property, it's often a case of, you know, that 10, 15, 20-year strategy. But what we have seen, especially in the Queensland market, Adelaide, Perth markets in the last 5 years, where they've gone through the roof in a short amount of time. So people see that and then want like a similar experience on their next investment. So when it comes to liquidity, often said as a silent killer in alternative investments. So how should a high net worth investor think about liquidity in terms of lockups and the exit paths before they commit?
I think that's such a critical component, because if you're going to go into any kind of investment, you know, what's the entry, what's the exit, how does it all look when I get my money back, what's the likelihood of the returns? Makes total sense, right? Like, I want to know that stuff myself if I'm going to go and invest in it. So I generally find, though, with the high net worth clients is they don't just leave a whole heap of cash just sitting there. They want their money working for them.
Yeah.
You know, you're not leaving millions of dollars just sitting there going, oh, I'm waiting for the next opportunity. It's more like, I've got this money, where do we now put it? Or this investment's finished, I've now got this money, where do we go to the next steps from that point of view? So I find that you still got to have a little bit of liquidity for opportunities, but you don't leave too much on the table sitting there. You want your money working for you. That's what people want to look at.
Let's make our money work for us. And I guess, you know, is there a level of patience that people are thinking about in terms of what they do? Because, you know, some investments take that bit longer. I'm going through that experience myself right now with various types of investments where you thought that it was going to finish in 12 months, but it's taking more like 18 months or, you know, closer to 2 years sometimes. So what is your discussions around liquidity and the patience and the, I guess, buffers as well around that?
Yeah. No. Look, it comes back to, I guess, what the goals are and what they're trying to achieve. Like, it could be, they just purely focused on income. Therefore, what investments are you looking at for that? But if they are looking for growth as well as income, then there's different investments that are going to offer those characteristics. And then it's a matter of determining, well, do we need to drive income out of that in a shorter period of time because we need that money to use as income? But generally you find they've already got things in place where there's income already there to live off. So it's a matter of like, well, okay, if we look at this investment, could be a 2-year time frame. And that's where, we like to look at other investments with a waterfall structure where it's giving you greater understanding of this is the time frame of the investment, this is what goes in, this is the protection that you have in place to go into this investment. And it could be that, it's 12 months to get into the project, you get your initial capital back, but then it's another 12 months for the project to be finished to then get your profit back from that deal. But at least with the waterfall structure, it stipulates when you're getting in, what your protection is, and when you're getting out. Likelihood of projected returns, but at the same time, if that development was to take a shorter time frame, then it might not take 2 years. You might get it in a shorter time frame. But you need to leave those buffers because some things do happen. I think it was even last year, it rained for probably all 3 months of summer. So there wasn't too many slabs getting poured for property development. So that delays things, right?
Yeah.
So you've got to have those conversations and expectations that here's the potential time frame of what this project might be, but at the same time, you might actually get it back quicker.
There's so many variables when it comes to investing, and I guess you're having ongoing discussions with people because there's hurdles along the path, right? So that's a little bit from Matthew today. Future Best is his company, and he is all it is in regards to private wealth strategist. So if you need some help with your private funds, then hit Matthew up. He can help you really escalate your wealth and look for those things like asset protection, due diligence, and liquidity, which is really important. Thanks for coming on.
No worries, Luke. Thanks very much. It's been fun. Cheers.